All right, if you've been keeping an eye on the housing market as a homeowner or hoping to buy, there are some important updates, both locally and nationally. Here to help us make sense of it all, we have Brian Coester, CEO of Real Estate Connection, back with us. Thank you for being here again. All right, so let's start with here at home. So they are currently in Montgomery County talking about those property taxes. What does this mean? They're talking about higher property taxes now.
Yeah, so luckily we kind of escaped that, right? So there was a bill introduced to the county council to increase property taxes to pay for some administrative changes, some infrastructure. They voted ultimately to turn that down. So it's a good thing for the county. Okay,
so this is a good thing moving forward for homeowners and those taxpayers out there.
Yeah, and so it's interesting because there's some states like Florida who are actually introducing to remove property taxes altogether, with the idea that when you own your home forever. Property taxes have been traditionally used to fund schooling and fund infrastructure. And honestly, with prices increasing so much, it's good that they ended up not passing the bill, because it ultimately increases the cost of home ownership, right? So those taxes go right into your payments, and it's a substantial cost on an annual basis.
Yeah, okay, so on a national level, we're seeing more home price cuts.
Yeah, so the trend here, right? So not increasing property taxes, price cuts, right? Federal Reserve, right? There's a trend here going on, which is basically the market has capped out, right? Like the up and the intake have sort of maximized, and what you're starting to see is more property decreases and price decreases than you have seen in a long time. So 18% of listings now have had some decrease, which is the highest number since 2016. We called that about 2 weeks ago before the data really came out. That trend is going to continue. You're going to start seeing more and more decreases until jobs start coming up or income starts coming up, and you start to see the equilibrium in the market.
Okay, and then so for interest rates now, so we know that the Fed's just decided to hold steady. And so what should buyers now be thinking about?
Buyers should be thinking, hurry up and wait, right? Okay. So right now what you're starting to see is the real estate market is not as efficient as a stock market, where it's just one big drop in a day. You see it in pockets. The Federal Reserve keeping rates steady, Montgomery County choosing not to increase property taxes, the overall increase in listings and increase in property, cut prices, just stable. I mean, show a market that's gone from primarily a seller's market to a more stable, and then going to the buyer's market, and you're right in the middle of that storm. Like, we've been getting a lot of rain here, and the storm of the mortgage market is also, we're right in the middle of it.
I love that metaphor there, the storm. But we're on the better side of the storm, so it's looking good.
Overall, it's better. So more affordability, lower property taxes, more options for sale at lower prices. The Feds chose not to lower interest rates, but they have lowered interest rates, and the stabilization of the interest rate is the sign that they're going to lower it. So overall, on a better track.
Okay, so that is a good sign. It's looking like it's on the up and up for everyone. Brian Coester, thanks so much for being here.
Thank you.
We'll be right back after the break.